Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and this is our first episode here in 2018, so Happy New Year's to all of our audience. And for our guest back on the program today, Anthony Milewski, he's the chairman and CEO of Cobalt 27. Happy New Year to you, Anthony.
Thanks a lot, Colin, and thanks a lot for having me. Looking forward to what's going to be a great 2018, I think.
Well, looking back, 2017 was, of course, a great year for yourself. Cobalt was your metal of choice, and you were very vocal at the beginning of the year that you thought Cobalt would be one of the strongest, if not the strongest performing commodity. It certainly came out on top, and that was reflected in the success of your business, Cobalt 27. Do you want to give us a quick recap of what happened in 2017?
Sure. Just briefly, we had the IPO in June, and then we did a follow-on in December, further adding to the Cobalt position and really expanding our balance sheet in anticipation of streaming transactions in 2018. That additional material gives us access to cheaper capital through inventory lending and different types of bank loans. So that business carries on as it prepares for its transition into a streaming business this year. So we're excited and really optimistic about what 2018 holds for the business.
Excellent. Well, I've got you on here today to talk about some of the themes that the commodity investors focused on EV, battery metals, grid storage can be looking for. And you sent me a message a few days ago saying that you thought grid storage was really going to come to the forefront for 2018. I want to talk to you about what that means. So maybe we can start out defining as a commodity investor what grid storage means.
Sure. Yeah. Look, 2017 was the breakout year for electric vehicles and the story as it pertains to the adoption of the electric vehicle and the basic materials that comprise of the battery that powers that vehicle. And that story is only accelerating. In fact, it's accelerating, in my view, faster than most analysts had anticipated. But 2018 is going to be the year of grid storage, and you're going to see the electric vehicle story continue on and accelerate. But then you're going to have the story in or out of nowhere, what people are going to perceive as out of nowhere, come in and once again reshape the supply-demand dynamics of a host of basic materials. So, grid storage, as we define it, is really effectively attaching batteries to the grid to either stabilize it, to harness energy in peak times when otherwise the grid can't necessarily take it. In certain instances, if you don't have a power grid, you're in certain places where you have solar or wind, and you want to harness that energy, but you're unable to do it. There are various applications for it, but what's interesting and unique about it is that all power grids globally have demand for it in one form or another. And I really was blown away by something that happened in December. So, as much of the world saw, earlier in the year, Elon Musk made a bet with, some local politicians down in Australia that he could put a Tesla battery field in place in a certain number of days, and he actually was able to achieve it. But that was sort of just a gimmick. And I think what's more interesting is what transpired in December. So the Loyang coal-fired power plant in Victoria, it went offline, it tripped offline, and the Tesla battery field delivered 100 megawatts into the national grid in 140 milliseconds. To put that in perspective, a coal-fired power plant's response time is between 30 minutes to an hour. And so this newly installed capacity in the form of Tesla batteries hooked to a wind farm responded in 140 milliseconds. In my view, completely disrupting and changing the future of our power grids, because regulators, utilities globally saw this, and I think have been completely blown away. And it's been very much underreported. And this is fascinating. And I think what it's going to do, in much the same way that Tesla has done for the electric vehicle, it's going to massively accelerate demand for these types of systems globally. And we're already seeing it. And I think that, as an investor, you need to be wired into this because it's not being widely reported.
So you have a more efficient system brought forward by these major battery banks in terms of the response time, but you brought up Tesla and Elon Musk, who's a very polarizing figure, and many of the people who would be detractors of renewables or EVs or battery metals will point to Elon Musk and say that based on his activity and getting these government credits, that these things are not actually viable. So that brings up the question. Obviously, there's many benefits of using these battery banks and running off renewable. But is it cost effective? And are we reaching a point, or have we already reached that point where it is?
Well, first of all, you should point out that what's one of the most subsidized commodities in America? I think it's coal. So it would be a misnomer to not think that fossil fuels aren't subsidized, because they are in a lot of different ways. But notwithstanding that point, what I will tell you, in particular for electric vehicles, if we talk about electric vehicles for a moment, one of the tipping points is when a like-for-like car costs the same and is not impaired by the fact that it's electric. In other words, it doesn't cost more because you have a battery in there. And we're already reaching that point with electric vehicles, and in some cases we're there. In other cases we're within a year or two of being at parity. And so, from my perspective, even with, in certain cases, some of the subsidies rolling off, we are now approaching that moment where, actually it costs the same. Now, that's really for electric vehicles. I think in the case of grid storage, it's a little bit of a different story, and it's a more diverse story. So, for instance, in Africa, where maybe in certain remote parts of Africa where you don't have the grid, you're actually using the batteries to store during off-peak times and then power in during peak times. And so, price, you have to ask yourself a question. If you can't have power at all, what does a kilowatt hour cost? For maybe more developed power grids like Australia or the States, you might be talking about stabilization of the grid. And so I think you're talking about different things. But whatever it is you're talking about, certainly the price of these batteries has come down increasingly. Now, I will note, and it's important for your investors to understand, that with the electric vehicle, really lithium ion is the winner because of energy density and weight being key factors for the automobile. With grid storage, it's a very different story. Elon has done and is doing a fantastic job kind of selling the story of his batteries. But make no mistake, the vanadium redox battery is an interesting technology that has a lot of potential. And it has certain aspects, for instance, like the recyclability of the vanadium, that could make it ultimately very attractive, and also bring up certain business models which would be different than Elon's. Namely, you could lease the vanadium, and you could have kind of interesting different concepts in there. So what I would say, just without getting into too much detail, is that the grid storage market for these batteries is going to be much broader. And unlike, say, the electric vehicle, which really touches lithium, nickel, cobalt, manganese, and copper, these kinds of commodities, I think what you're going to see for the grid storage market is a variety of batteries for different applications. And in addition to the lithium-ion battery, which is definitely going to be a key component of this, you're going to see the vanadium redox battery, potentially the lead-acid battery. Now, as that happens, you're going to have impacts on each of those commodities. So in the first instance, you're going to have a big impact with additional demand on the lithium-ion batteries, but you probably will have a knock-on impact on vanadium and potentially lead as well.
Anthony, as a commodity investor, you have to be very cognizant of the demand picture and the price of the commodity and how easy it is to extract. In the case of cobalt, which of course you're exceedingly familiar with, as an investor, it makes a whole lot of sense to invest either directly in cobalt or something, a project that produces primary cobalt, which of course is hard to find. Looking at these other metals that are going to play into grid, like vanadium, manganese, a couple others you just mentioned, which one of those makes sense as a commodity investor to try to get behind?
Okay, so look, I would avoid manganese. There's plenty of it out there. I would say vanadium is much more nuanced. On the one hand, the technology is extremely interesting. On the other hand, the technology is not ubiquitous. It has not been adopted. So with the lithium-ion battery in an automobile, for the next 7 to 10 years, automobile makers will tell you that there's nothing else going in the cars. So the technology has been adopted. And so the fact that the price of some of the commodities has gone up doesn't really cannibalize demand. Whereas with vanadium, you really run the risk of a material price increase in vanadium actually cannibalizing demand before it gets off the ground. And so for an investor, on the one hand, you look at vanadium, you say, this is interesting. On the other hand, you have to be a little bit careful that having a big run into vanadium doesn't actually cause that the technology is not adopted and say a lead acid battery or or the lithium battery story continues on. So I think as an investor, you'd be wise to dabble in a vanadium or a lead, but I think you have to be really careful with your portfolio and make sure that it's not going to kill you if one of these things turns around. For vanadium, have a look at Largo. It's a name that gives you kind of that exposure. For me, setting aside my feelings about Cobalt, which I think the listeners know, I really like nickel. I think that it's one of these that is going to continue to slip under the radar. Big hedge fund managers who chase liquidity, they're all going to chase copper. And so, First Quantum and the big copper names have already run, but they're going to run much harder as we go forward. They're going to run well before the impact on copper and on the physical market. So, the actual impact on the power grid from electric vehicles and ultimately from the electric vehicle itself is probably a couple years away, for sure. But you're going to see the equities move first because portfolio managers are going to need a liquid investment that they can trade. And so they're going to express their electric vehicle battery storage views by going long copper. Nickel, on the other hand, isn't quite as liquid as copper in terms of, I'm not talking about the commodities, much as the equities. And so there aren't as many names. And so for me, it's going to be the sleeper. And, when I look at stocks like, Giga Metals and some of these micro caps, it's pretty easy for me to see how, these things trade at a multiple of where they are today, just because it's going to take longer for that money to kind of flow down into the nickel sulfide deposits, which are going to ultimately be critical for all these battery stories, whether it's the electric vehicle story or the grid storage story.
Anthony, looking at nickel, it hasn't had that big move like Cobalt has yet. And while it is up in price a bit since you alerted us to this nickel sulfide story a few months ago, what kind of catalyst are you waiting for, or do you think will come along to really kickstart the nickel story?
Yeah, so the nickel market is a larger, more complex market than, say, a cobalt market. And certain types of nickel can be swapped over and used for different applications. And so there's much more nuance. So for me, it's less about waking up on any given Wednesday and having the thing go to the moon, although that could happen if a certain producer went offline or something like that. But I don't think you ever want to invest on that basis. Instead, to me, how the story unfolds is if you look at quarter on quarter EV sales, they came out, December's numbers have come out, and they've blown everyone away once again, right? China. They've extended their subsidies in certain cases, and they didn't need to do that. The numbers were still well above what analysts projected. So I think how it happens is in the coming quarters, we continue to see the acceleration of demand for electric vehicles, and then the market in general wakes up and said, oh, hold on, if 2025 electric vehicle penetration is 40%, for new vehicles, 35%. What does that mean for nickel? And no one is projecting that right now. But at some moment, the reality is going to set in that people are buying these vehicles, and that will be the catalyst to really then come into the nickel equities. And you'll see people buying the large deposits. And so, if I was thinking about nickel, there are the Norilsks, which, you should own, the western areas of the world, which are big and more liquid. But I like to play the options. So for me, looking at the large world-class assets that are out of the money options or potential takeover targets are interesting because that's where you could see a 10 bagger, a 15 bagger are kind of embedded in these options. And so you do and should be long some of the larger nickel names, understanding that things like Chinese New Year can move those stocks around. And so you have to be prepared to sit through it. But if you do have that view around the adoption of the electric vehicle, then in addition to being long some of the larger caps, you need to have a look at some of the option plays.
You're in constant dialogue with many sizable fund managers, and just looking at 2018 unfolding, stepping back from grid and EV themes, what do you see playing out in 2018? Any big things you're looking for, or things that will continue going up, or new areas of interest?
Yeah, I would just say that I think the year is going to be made in the kind of Q1, the first 4 months, maybe part of Q2 in terms of equities. The tax cuts in the U.S. Are going to fuel further capitulation of bears, and more funds are going to flow into equities. The second half of the year could be really driven by QE discussions around quantitative easing, but it's going to be a good year for equities. I think that's pretty clear. And if you think about it, while 2017 was a great year for a sector, if you look at the charts, we're still off from anywhere near what were the highs in the super cycle. And money is looking for a home. The world is awash with money. Governments have been printing now for years, and ultimately that money will probably come into commodities to find a home. And so I think copper is going to have a big year, and I think copper equities, I should say, are going to have a big year, because fund managers who are generalists, or who maybe do resources but aren't mining specialists, are going to feel that if they're not long copper, that they're not going to be able to kind of hit their benchmarks, because they're going to miss out on that move. And so I could foresee that in particular in the large cap names, copper will have a massive year on the equity side. The other kind of interesting thing that comes up, which is not widely thought or discussed in any of the literature that I read, comes from conversations that I have with automakers. And it's interesting to talk with them about the electric vehicle revolution and what they see and how they see it unfolding. And one of the things that I hear time and time again is from really senior individuals at automakers. They say, as much as the green revolution is driving electric vehicle adoption and we're excited about it, there's actually something which is far more important that people don't quite understand. And that's that, when you look at and read the business plans for these automobile makers, they're thinking about mobility as a service. They're thinking about autonomous vehicles, and they're thinking that in 10 years, you will not drive a car. The car will drive itself. It will pick you up, drop you off. Maybe you'll own it and it'll go do Uber all day. How it's going to look exactly is unclear. But what is clear is, in order for that to happen, you need to have a fleet of vehicles globally that has the technology embedded in it for that to work. In other words, you need the sensors sitting on the electric vehicle. Many, if not most, of the gas-powered machines don't have that technology built in. It's built into basically every single model on these electric vehicles. And so I think one of the interesting things that people forget is that, or they don't even really haven't even clued into, is that actually automobile makers are keen to have the electric vehicle there, not just for altruistic environmental purposes, but they're also keen because it allows them to create the fleet of vehicles that are going to usher in the next generation of the automobile industry, namely ride sharing, namely mobility as a service. And for whatever reason, analysts and reporters really haven't picked up on that story. And I think it's going to be huge, because it's just one more group of individuals, very powerful individuals, who are rooting for the success of the electric vehicle story.
Anthony, it's no secret that automakers are struggling to get their hands on Cobalt, and Cobalt 27 holds a sizable above the ground Cobalt, physical Cobalt. And I just want to ask, what protects your shareholders from an automaker coming right now and just buying Cobalt 27 for the physical Cobalt and then missing out on that future rise? Is that something you've given thought to?
I think, as a fiduciary of the company, and as someone who has put his own money into the company, would just say that if someone were to do that, they would have to pay for it. And I think shareholders wouldn't just sell. I think you would see that they would have to pay a heavy price for that. And I think that's a reason to be long the company. Eventually there may come a point when, whether it's a battery maker, an automobile maker, a government decides that they want to own it, and we'll be one of the stops on their list. And so I think that's an exciting reason to hold the stock.
Agreed. Well, Anthony, thank you so much for coming back on the program with us. We'll get you back several times this year to discuss everything as it unfolds. And best of luck in 2018.
Thanks a lot, and always appreciate being on, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?